Good morning and happy new month. My name is Rufas Kamau, markets analyst at FX Pesa, and welcome to another episode of the Market Snapshot series. So today, as we all know, being the first day of the month, we'll be expecting out of new stuff to be happening. And so far, already so much has happened this morning. So we'll be looking to understand what happened and the major new trends that have been established. And once we get through that, we understand the key price levels for the day. So there's quite a number of stuff that is currently happening in the markets. Hello, George, and welcome to the session. So let's get it started. So first things first, look at the Asian recap, or basically what happened during the Asian session. So one, Chinese stocks rose while the Asian markets pared losses as factory activity increased in the world's second largest economy. So this was the biggest news in the morning, factory activity increasing in China. The offshore yuan gained about 0.3%, while the Australian dollar, which is particularly sensitive to China's outlook, reversed a sharp drop and gained about 0.1%. So the Hang Seng China stock gauge rose as much as 3% after data showed China's manufacturing activity increased for the first time in more than a decade. An Asian equity benchmark reversed course and rose, while futures for the S&P 500, the Nasdaq, and the Euro stocks all recovered the losses that were experienced on Tuesday. So a measure of dollar strength was a little changed, holding recent gains as investors recalibrated for a higher than usual peak in the US interest rates. So on top of that, treasury yields continues to rise. The 2-year treasury yield increased by more than 10 basis points in February, while the 10-year increased by more than 40 basis points in the same month. So government bond yields in Australia and New Zealand fell or literally lost a couple of basis points. So that's one of the key highlights. So if you look at the economic calendar, it's quite clear that the Chinese manufacturing PMI, which is basically a survey from the manufacturing sector to try and understand the key trends in manufacturing, then you can see that it has been literally quite a good jump. Before we had a big sell-off happening in February 2020, a recovery, and we had a couple of months on the lower side prior to this morning's reading. So as you can see, the current reading here of 52.6 was the highest reading we have had in over 10 years. So the last time we had a similar reading was in May 2012, indicating a very strong growth in Chinese manufacturing. So we know that there is a couple of factors that have contributed to a very strong growth in China. One, at the end of last year, December, January, we saw the Chinese government remove all COVID-19 restrictions. So this is the first time that the Chinese are going fully back into manufacturing without fear or being restricted by COVID-19 regulations. So besides these, we also had Chinese New Year celebrations somewhere in mid-January, which lasted about 2 weeks. This was expected to slow things down, but now it seems that things have picked pace considerably. So interest rates in China have remained low at 3.4%, and inflation is well below 2%. So in further announcements, we saw the Chinese government announcing that it's going to add more fiscal spending. So besides the quantitative easing that has been happening, especially in the real estate sector, we are also seeing some fiscal expansion. So China Finance Minister, and this was this morning, basically said that China intends to moderately increase fiscal spending in 2023. And this basically means more money being pumped into the Chinese economy, which is very positive for Chinese equities. So we don't have Chinese equities on the trading platform, but we have US listed Chinese equities, which will be tradable once the US market opens. So we will be expecting to see some activity and some increased volatility in those individual stocks. So besides, we also be expecting to see some further upside in the Hang Seng index. So this has been one of the biggest performance this morning. So you can see the big jump that happened early this morning. So right from midnight it has been one story, a very big spike in the Hong Kong index or the Hang Seng index. So from here, you can see the market opened right here and then rallied straight up. And as you can see, the current price level is 3.76% higher. And this is within just a couple of hours trading. So if you zoom out, you'll notice that this was a key trend line acting as the resistance, and the market crossed through it without a problem. So there is a good chance that the fundamentals could boost this activity, and we could be seeing some further upside in this particular index. So we can see there was a level that was acting as support here, and then eventually acted as resistance. So here the market was finding support consistently, broke, and then eventually broke lower. There was a retest here, and on this retest here, the level was acting as resistance. And this is the level of $21,000 per share. So there is a good chance that this momentum could continue going up, and we could be seeing the Hang Seng index trade at 21,000. This could be either today, tomorrow, or through to Friday this week. So a very interesting play for today, out of strength coming in from China. So whenever there's good stuff happening in China, it's always positively correlated to the neighboring countries, majorly Australia and New Zealand. So as the Chinese currency also gained against the dollar, and you can see this was happening this morning, Chinese yuan or renminbi was gaining against the US dollar, eventually reversing this particular trend line that we have been following here and cruising through it without a problem. Then other currencies in the Asian region are also following the same direction. So besides seeing this break happening in the Chinese currency against the US dollar, we also saw the same happening in other Asian currencies. So one of them being the Australian dollar and also the New Zealand dollar. So the New Zealand dollar made a very big spike against the US dollar. So you can see that already this has been broken. This was acting as a resistance, and the market seems adamant on pushing even higher. So I'm trying to look for Audi USD, my charts here. So it's right here. Same thing, a very strong push towards the upper side. So for this one, I don't think it has broken yet. So it seems like a market that is attempting to push higher, but also there is the continued risk of potentially very strong US dollar. So if the US dollar regains strength in today's trading, either the London or the New York session, then there might be a good chance that we will be seeing these trends start to reverse. So I would be very interested in trading the Audi USD pair, especially if it gets to this level here, which was acting as support. So 0.67814 seems to be an interesting data point to observe the price once it gets here. In this case, I would be looking for signs of bearish entry so that I can trade it back downwards. So as for gold, we can see continued strength. So we tried timing the market here. I remember doing this. So we were looking at this area here. So the market went down, grabbed some liquidity, and eventually did not manage to rally higher. But then what we are seeing here is the market doing the similar thing, but this time it played out. So market drops, finds a support, gets back to the support, a strong rejection, but in this case, there was a strong rally. And then today you can see the continued activity where gold was continuously gaining against the US dollar. So one key thing to notice is that the upper trend line has been broken, and there is a good chance we'll be seeing some further upside happening in this area. So if I zoom my chart here, I zoom out, you can see this resistance has been playing out as well as this support. But now that gold has broken this area here, then the price pattern indicates some further upside to be happening. So if you look at the moving averages on the 1 hour chart, the 50 moving average is very close to breaking the 100 moving average and potentially even breaking the 200, which would be interpreted as the golden cross when the 50 eventually crosses the 200. So there is a good chance we'll be seeing some further upside happening in gold price action today. And this is dependent on whether the dollar remains strong or whether it continues trading sideways. So on the other hand, if you look at indices, S&P 500 made some very good pullback, got to the trend line, dropped, got to the trend line again, dropped all the way down, and now we are seeing some resurgence, and this is eventually pushing back to the trend line. So as you all know, it has been a continued theme. So as the market continues pricing in higher interest rates, then anytime the market gets to the upper trend line, then we are looking for bearish entry to go for short selling positions. So it has been quite a theme. Gets here, drops, gets here again, drops, and now we are looking for something similar around this area. So also you have to be prepared that there's a chance the market could break higher, but if there's signs of bearish entry, then it makes sense to go for a bearish position. So same case with the US 30 or the Dow Jones Index, you just have to observe the price action along this trend line. So if the price ever gets to this trend line, then you look for short selling entries. And it's the same story when it comes to the NASDAQ, which slightly broke yesterday. But now we have an adjusted trend line considering yesterday's price. And now we are looking at the price action around this area, potentially looking for short selling position if we happen to see the market finding resistance here. So as we progress, if you have any questions, feel free to type those questions and I'll be responding to them right away. So yesterday, we happened to identify this break here of the UK oil or Brent oil. So the market continued riding up and got to this resistance as projected, $83.9 per barrel, before rejecting the area and going back down to retest $83.0 per barrel. So from then, this morning, the market has started with a very strong push towards the upper side. Now we are testing this resistance and there's a good chance we'll be seeing a break. So a break would basically be a basis to indicate that we are moving to the next level. And there's a good chance we'll be looking at the prices at the previous high here around this area. And I'm literally talking about a price level around $85.6 per barrel. So it could be a very nice break to trade, looking at higher oil prices as we continue seeing positive economic data. So remember, China is the world's largest importer of oil. So whenever the economy is doing well, then it's often an indication of higher demand for oil. And it's the same thing that we saw in the US, a big consumer of oil, basically printing some good manufacturing data. And this led to a good growth in oil prices, a good rise. And now we are expecting similar thing to happen, especially after this morning's price action and the announcement of increase in Chinese manufacturing. So there is a good chance we'll be seeing some further upside happening from this one. So as for the economic calendar, we'll do a quick perusal to see what we're expecting for the day. So this is our Forex Factory. CPI from Australia, yes, inflation data from Australia came in slower than expected. So inflation is slowing down, currently at 7.4%. No pressure, things are good. GDP at 0.5%. This is now pressure. GDP is slowing down. So if you compare the previous quarter, it was a growth of 0.7%, and now it has slowed down to 0.5%. So this is still well above zero. So it's not badly off, but yet it's still bad news for the country. So Chinese manufacturing PMI 52.6, services sector 56.3, Kaizen manufacturing PMI 51.6. All these indicators indicating expansion, save for the final manufacturing PMI for Japan, which was under 50 at 47.7. So going forward for the day, I don't think we'll be having a lot of volatile news. Besides retail sales in Switzerland, this is a key indicator. This was down negative 2.2%, basically indicating contracting retail sales. This would mean that the Swiss consumer is not that strong as expected, but then compared to last month, it's an improvement. Switzerland manufacturing PMI will also be expected. Italy, French, German, and also the Eurozone final manufacturing PMI. Before we look at the manufacturing PMI for the UK. So most important news perhaps will be a speech by BOE Governor Bailey. So he's set to speak due to the cost of living crisis conference organized by the Brunswick Group in London, and a lot of audience will be expected for the speech. So we'll be having also a speech from FOMC member Kashkari, then final manufacturing PMI for the US will be expected at 5:45 p.m. before we look at the ISM manufacturing PMI at 6 p.m. So that's the news we're expecting for the day. So I will be more interested with what the BOE governor has to say about the cost of living crisis in the UK and also the ISM manufacturing PMI in the US. So that's it for today. Thank you very much, guys, and I hope to see you on the next session. So I'll be answering one question here. Hello, RK. I would wish solicited advice on how I would be doing analysis. So should it be higher time frame to lower, or rather the lower to higher? So you always start from the higher time frame to understand the bigger picture and then narrow down to a smaller time frame. So always start from a bigger time frame and then go down to smaller time frames. So thank you, guys. See you on the next session.